Hello, welcome to our channel Commerce Easy Notes. Today we are going to discuss about the topic Sebi, that is Securities Exchange Board of India Act 1992. Now let's see what is Sebi. The picture shows the headquarters of Sebi, which is in Mumbai. It came into existence in 1988 to regulate the functions of securities market. But initially, Sebi was not able to exercise that control. After that, in 12th April 1992, Sebi got a legal status. Now, Sebi is a corporate body with separate legal existence and perpetual succession. Perpetual succession means continuation despite of death. Next is the reasons to form a Sebi. The first point is manipulation of security prices. That means some companies are manipulating the price of securities in the stock market. Next, the second point is price rigging. That means manipulating the price of securities with the main objective of inflating or depressing the market price. It is a cheating towards the investors. Next point is insider trading. Insider is a person connected with the company such as directors, promoters, etc. These insiders have a sensitive information which affects the prices of the securities. This information is not available to investors, but the insiders get this information by working inside the company. And if they use that information to make profit, that is known as insider trading. SEBI is not entertaining insider trading. The fourth point is delay. The delay in listing and settlements are corrected. Next is lack of fair dealing. Mainly, SEBI is established for promoting fair practices. SEBI checks transparency, efficiency towards investors as well as issuers. The sixth point is protection of investors. SEBI prohibits unethical practices against the investors. The promoters should raise fund relatively at low rate. The last point is lack of control over brokers. In olden days, the activities of the brokers are not controlled. By the introduction of SEBI, it got controlled. Next, we discuss about the functions of SEBI. The functions of SEBI is divided into three. First one is protective function, second one is developmental function, and the last and third one is regulatory function. First, we see what are the protective functions. Actually, these functions are performed by SEBI to protect the interest of investors and to provide safety of investments. The functions are it prohibits insider trading, checks price rigging, promotes fair trade practices, and the last function is provides financial education to investors. These are already discussed. Next is developmental functions. These functions are performed to promote and develop activities in the stock exchange. The first function is SEBI promotes training of intermediaries of the securities market. Next is SEBI introduces e-trading, that is electronic trading for investors, and also demat format. That means converting the physical form of securities into electronic format, and also introduced discount brokerage. Discount brokerage means a business that allows clients to buy and sell securities but does not provide advice, research, planning services to investors. The clients who use discount brokerages usually have little to no interaction with the real brokers. They are known as discount brokers. The last function is SEBI made underwriting optional. Next is the regulatory functions. These functions are formulated to regulate the business in stock exchanges. First one is SEBI formulated guidelines and code of conduct to regulate the intermediaries and corporates. Also, it regulates the working of mutual funds and takeover of the companies. The last function of SEBI is to conduct inquiries and audits the stock exchange. Next, we discuss about the management of SEBI. The board members include chairman and 5 other members. 2 of them from the ministries of central government dealing with finance and law. The other 2 members are the central government nominees and 1 member from the RBI, Reserve Bank of India. Next, we see the departments included in SEBI. First one is primary market. It deals with policy matters and regulatory issues relating to primary market. Next is secondary market department. It deals with the policy matters and regulatory issues relating to secondary market. Next department is issue management and intermediary department. This department is responsible for inspecting all prospectus and letters of offers. Next is Institutional Investors Department. It makes policies for foreign institutional investors. The Legal Department deals with the legal matters of SEBI, and the Investigation Department inspects and investigates all the activities. Apart from these departments, SEBI has 2 advisory committees, one for primary market and the other for secondary market. Next is the objectives of SEBI. The first objective is to protect the rights and interest of investors. And the second one is prevention of fraud and trade malpractices. Third one, regulation and development of code and conduct for fair practices. The last one, providing a fair market with each investor at equilibrium. All these points are discussed earlier. Next, we discuss about the powers of SEBI. First point is powers relating to stock exchanges and intermediaries. SEBI can ask information from the stock exchange and intermediaries regarding their business transactions. The second point is power to impose monetary penalties. SEBI has been empowered to impose monetary penalties on capital market intermediaries and other participants for a range of violations. Third point is power to initiate actions in functions assigned. For example, it can issue guidelines to different intermediaries or can introduce specific rules for the protection of interest of investors. Next point is power to regulate insider trading. It is already discussed. The fifth point is powers under Securities Contract Act. For the effective regulation of stock exchange, the Ministry of Finance issued a notification on 30th September 1994 delegating several of its powers under the Securities Contract Act to SEBI. The last power of SEBI is that to regulate business of stock exchanges. SEBI regulates the stock exchanges, intermediaries, mutual funds, fraudulent activities, unfair trade practices, etc. So this is all about SEBI Act 1992. Hope you all like the video. Thank you for watching.